Bitcoin is going to 10K. That is exactly what Tim Draper said, but it was back in 2013. And then 3 years later, in 2016, Bitcoin went from $200 to $10,000, 10K.
2013, Bitcoin was about 200, and I made that prediction that it would hit 10,000 by 2017. It weirdly, about 3 years to the day, it hit 10,000. And it went beyond that, came back down to about 4,000.
But Tim Draper is no god, and he's not all-seeing, he's not omniscient, and not all his predictions have been correct. In fact, in his latest BTC prediction, he said that Bitcoin would hit $250,000.
In 2018, and I predicted then that it would hit 250,000 by 2022. And I'm saying the end of 2022 or early 2023, we'll see it hit 250,000.
Whether this happens or not, one thing is going to be certain. The official halving of BTC is less than 1 year away. And simultaneously, every indication suggests that ETF approval is on its way. And therefore, it does stand to reason that Bitcoin's going to rally hard once it really decides to start moving. So when should you buy Bitcoin? Should you have bought already? Is it now too late to buy BTC? These are very important questions, which at least right now, nobody seems to be addressing, not even Tim Draper. But there is somebody out there who knows the answers, and we will break them down in today's video. Welcome to the channel. My name is Maddie and this is Altcoin Buzz. Best of luck if you choose to invest, whether it's in Bitcoin or any of the altcoins that we cover. Just remember, I'm not a financial or investment advisor, which means that this video is not official financial or investment advice. Let's talk about Bitcoiners for a moment, sort of their psychology, maybe their ideology. Many of them believe that you can never have enough BTC and that you should be constantly stacking. MicroStrategy comes to mind, of course, run by Michael Saylor, and we tend to agree with that philosophy. But there is a more specific theory out there that helps us to understand when is the right time to buy, specifically. And we love Michael Saylor, but to be honest, the biggest advocate of specific buying cycles and timing in this case is Plan B on Twitter. At 100 trillion USD is the handle. For context, Plan B represents a former quant analyst and institutional trader and is the guy behind the stock to flow model that you've probably heard of before. We've certainly talked about it on this channel. Stock is how much coin there is, kind of like availability, and flow is how much new coin is added. This used to be a measurement only for commodities, for things like precious metals. You can think of gold. But Plan B applied it successfully to Bitcoin, and it's a model that is right at home with cryptocurrency. But when it comes to Plan B, stock to flow is not his only theory because he believes that Bitcoin moves in 2-year cycles that mostly surrounds the 4-year halving events, but not exactly. And so this time the next Bitcoin halving is expected to be in late April or maybe early May of next year. The projected date right now is April 26th, 2024. Okay, so what's all this talk of 2-year cycles? Does that mean that you should have been buying in 2022? And if so, are you late to the party? Probably not. Let's break it down. The theory is that the dominant bull cycle for Bitcoin starts 6 months before the halving event. So the bull cycle precedes the halving in anticipation, and then that cycle continues for 2 years. So that means that the bull cycle ends 18 months after the halving event, right? Because it started 6 months before, then you have the halving event, and then 18 months until the end. That represents a full 2 years. And so if we assume this is true, then logically, looking ahead, one of the best times to buy Bitcoin is going to be in late October of this year, because that will be 6 months before the late April halving, when that takes place. And whether you plan to buy Bitcoin today or maybe later in October, maybe you're buying altcoins, you're probably going to want to take advantage of the deal that we're offering right now. Heads up if you're watching this video because we have a new exclusive campaign with ByBit, this time with up to $81,000 in prizes. You can get your share and you can earn up to $30,000 just based on how much you deposit and trade. Also, we're launching our brand new trading competition that has up to $51,000 in its prize pool. And the idea here is super simple. The more you deposit and trade, the more you can earn. And if you want to find out more, just click the link in the description below. Coming back to Bitcoin now, remember for context that the halving event represents a block reward that gets cut in half. And the next one's going to be from 6.25 BTC every block to 3.125 BTC. And people think that the halving is priced into Bitcoin, but it never is really. And that's why this theory has been profitable so far, because price goes up into the halving and then stays there for a while. And then subsequently, as we know, altcoins are going to follow Bitcoin's lead. Money flows into Bitcoin first, then Ethereum, then the higher cap altcoins, and then all the way down. It cascades, it trickles down. So while we're talking about Bitcoin in today's video, it's probably also a good time to start buying altcoins. Okay, so based on stock to flow and the timing of the Bitcoin halving, we've established that the best time to buy BTC is going to be in October later this year. What about the second best time to accumulate? Well, right now actually represents a great time. And here's the proof. Take a look at this chart here. Whales are doing what they have to do, but we also have to look at what the shrimp and the crabs and the smaller fish are doing. And in fact, they're absorbing more than 208% of the monthly mined supply of Bitcoin. And if you don't know, let me tell you, shrimp are the ones who hold less than 1 BTC, crabs hold 1 to 10 BTC, and various breeds of fish hold between 10 and 100 BTC. By no means are they whales, but in some cases, that represents a pretty nice account balance. But the fact is that no one, literally no one, can time the market perfectly. And anyone who says they can is either lying to you or trying to sell you something, and we know that it can't be true. We know we cannot time the market, not perfectly. But we do know that there will be huge market gains in the future, and therefore it makes sense to have some kind of a position active right now. Just think of how many times in crypto you've seen a project that you like, but maybe you didn't pull the trigger. Then a couple of weeks later, or a couple of months later, it's up 200%, 300%, 400%, 500%, and you kick yourself for missing your opportunity. It happens all the time. Don't be too harsh. We all know that feeling, and we don't like it. But the point is that don't miss the entirety of the bull market and the gains that are out there by trying to time the perfect bottom of the bear market. It's just not realistic. In fact, it's not even possible. If you get in, then you are guaranteed to take part in the returns at some point. It's not going to be with 100% efficiency, but don't worry about that. The goal is not 100% efficiency. The goal is participation and a long time horizon. And if you've been dollar cost averaging into the market already, then you are well ahead of most people. And if you haven't, well, honestly, now is a pretty good time to start because prices are down. And it could stay that way a little bit longer, but that just allows for more time to accumulate. Better market conditions are slowly starting to form and the bull will be returning. Therefore, it's sensible to buy the projects that you like now, that are doing well, that are building in this bear market while prices are low. The same applies to lump sum investing, but of course, if you choose to do that, then you won't have much or any extra dry powder lying around if prices dip again. But that being said, if you are either lump sum investing or dollar cost averaging, they're both good strategies to get started with right now. Maybe it makes sense to combine both strategies based on your own risk appetite. You could do that by doing a DCA plan for the next 4 months, for example, until late October, and then maybe you could make a lump sum investment at that point. Then you get a chance for the double benefit of earning now and getting money invested later. If you're not familiar with Plan B or his stock to flow model, we highly recommend you follow at 100 trillion USD on Twitter. I want to remind you quickly at the end of this video that we have an exclusive new campaign with ByBit that includes up to $81,000 in prizes, of which you can get your share, and you can earn up to $30,000 just based on how much you deposit and how much you trade. Also, at the same time, we're launching our brand new trading competition that has up to $51,000 in its prize pool. And the idea is super simple. The more you deposit and trade, the more you can earn. And if you want to find out more, just click the link in the description below.